Look at there, you're back. That's awesome. So, as we've been going through this series, I've been talking about the law behind life insurance and annuities. And it's been primarily behind life insurance, but it's been things that, as I have been a student of life insurance and how it impacts my clients, how it can be used as a tool, I'm simply not seeing a lot of marketing material coming out on it. I'm not seeing a lot of, there's agents who will talk about it, but unfortunately I don't know that they have very much credibility with a lot of folks just in the general public because they're agents, So the assumption is, all of this is about, just hawking policies when there's really some cool stuff, and maybe insurance companies just need to figure out how to talk about it more. I don't know, but I just wanted to share it with you. For those of you who are fellow attorneys, fellow insurance agents, also wealth managers and that sort of thing, this is hopefully to help you understand how these can fit with your clients' portfolios, estate plans, whatever. There's some other items I may get on later because estate attorneys, I still love ILETs, and those are irrevocable life insurance trusts, and I think in the very near future we're going to have to start talking more and more about those, but that's for another day. Today we're going to talk about the exciting topic of Internal Revenue Code, or the Federal Statute 7702B. So if you'll remember, we talked about 7702. Okay, that was really the first episode. That's the one with the punch. That's the granddaddy of them all. That's what defines life insurance. That's where its power comes from. We've also talked about 7702A. So when the life insurance policy gets funded too quickly and how it drops out of being completely tax favored to something slightly different, but for most clients' purposes, it's really no different. Honestly, I mean, if they're just building it this life insurance product for the death benefit, it's no different. Today we're going to talk about 7702B, and sometimes the 7702A and 7702B go hand in hand. So we're going to talk a little bit about that. So where does 7702B comes in? It comes in with our long-term care products. So specifically, whenever you see a long-term care product that is based off of some form of life insurance, my preference is whole life, but some form of life insurance, that's where you're going to see that, because what happens is sometimes those policies actually find themselves being what we talked about last time. Sometimes they find themselves being MECs. So how are those proceeds treated? Well, because of 7702B, it gives some exceptions to 7702A and clarifies that the benefits that come out are coming out as long-term care benefits. They're not taxed. They still have that favored tax status, which is kind of the whole theme of why 7702 exists at all, right? So 7702B is the one that gives the long-term care policies their real power. All right, so we've got life insurance policies. These are hybrid policies. These are the type policies that if you don't use them, you get the death benefit, so you really haven't lost anything. Typically, if you have more benefits on them, so for example, they grow more over time, or there's one out there that's a beautiful policy that has an unlimited lifetime benefit, typically you're going to get less out of those policies. So let's say you put in $100,000 in some of them, you're going to get $90,000 in a death benefit, or you're going to get $50,000 or $60,000 in a death benefit because of those promises, because of those guarantees. Remember, we talked about contractual guarantees on the fifth one. All right, contractual guarantees are a beautiful thing, but they're not cheap either, right? So back to 7702B. 7702B is where the law states that the life insurance policy, when it has those living benefits, especially those long-term care benefits, that those can get paid out without tax consequences. So let's say that we're talking about a $100,000 life policy, but you're actually using the benefits, and you wind up getting, $250,000, $300,000 worth of benefits. You're getting those tax-free because it's coming out of the long-term care portion of that policy. So that is where 7702B comes in, and that is the differentiation with the tax consequences, is how we can structure those policies so that they can pay out money and not be taxed. So again, it's all in the code. It's the code that makes it beautiful. It's not the company's color. It's not their mascot. It's not some widget that they've attached to it to generate sales. It's the tax code. So I hope you found this helpful. I will probably do one more episode, but I anticipate this is going to be the last one that we talk about. So again, we're talking about 7702B. It's the Internal Revenue Service or Internal Revenue Code, tax code that affects these policies. So as you review these policies, I even looked one up before I came on here and just did a word search for 7702B, and there it was. Because it's in that hybrid type of long-term care policy. Now, why would we talk about these? Because the need for this type of policy is just getting greater and greater as we age, particularly as the boomers age. There's a great need for this, and Medicaid isn't designed for people with money. Medicaid is designed for people who are coming to the end of their money. So wouldn't you rather call some of your own shots when it comes to long-term care? So that's what makes these so important. That's why I thought I would include 7702B. So I hope you found this helpful. Again, I am a licensed Tennessee attorney. I'm a licensed life and health insurance agent as well. These opinions are mine. If you haven't paid me money or signed a piece of paper, chances are you aren't my client. But I hope this somehow helps you in just working your way through these policies, understanding them, whether you're helping a client understand them, whether you're trying to understand your own, whether you're shopping for it, whatever. I hope this is helpful. So see you next time. Thanks.